Hi guys, hi girls. Andrew here. Hope you've had a good start to the Friday. Seeing a bit of a retracement now, of course, in dollar to end the week. Been a great week for dollar. Retracements, I think, only natural. Good morning, Duper. Good morning, NFX. Coffee. Oh, you caught me drinking coffee. Sorry about that. Okay, so guys, today we are going to end the week by talking about why I think some traders fail. The common reasons why some traders fail. Now, it's billed as the reasons why traders fail. It should be some traders, because of course we don't all fail, and hopefully guys and girls in this room are in that mold as well. So going to end the week. Unfortunately, when we mapped out the the 2 weeks of streaming, maybe I shouldn't have put this on the Friday to end the week on such a negative note. But it's an important topic anyway. But maybe we shouldn't be ending on such a negative note. Talking about ending the week, I was chatting to some people in the room earlier today, this morning, and we're talking about actually trading on a Friday. And I said something, be safe today. Someone asked me for my tip for today, and I said, tip for today is, don't lose money. And I think it was VIP that said to me, well, why should Friday be any different? If you've got an edge in the market, you should trade it the same as any other day. And VIP was totally and utterly correct. If you've got an edge in the market, there's no reason you should trade it any different on a Friday than you should do on a Monday through Thursday. But what I've seen countless times over my years of trading are people trading on a Friday, because a lot of people have in their trading plans targets. They have targets that they want to achieve for the week and for the month and so forth. It actually happens to be the same also in on the big desks. People have monthly targets, yearly targets. Coming to year end, there's always a bit of a different trading environment. But for us retail traders, we tend to have targets that sort of a weekly target and monthly targets. So there's a tendency to chase trades, put on trades that are basically not there on a Friday because you're chasing that target. And if you haven't made your target, you're forcing yourself into trades that shouldn't be there. And also, if you've had a loss, a few losses on Friday morning just through following your trading plan, and you think I've got to get those losses back, and it's really the wrong way to go into the weekend, by throwing your plan out the wall, out of the window, by breaking all your rules, just chasing targets and also chasing losses. So that's what the point I was making. Absolutely, still continue to trade it like any other day, but don't get caught on a Friday for the wrong reasons. And this trading business is really, it's hard enough anyway without putting these additional emotional pressures on ourselves. So that was the point that I was going to make there. Now, before we start, I want to also tell you a quick story about when I, as you know, if you've been following me on the streams this week, you know that I've started my trading career in the pits of London, all those years ago. And when I left the floor in about 2000, when it closed here in London, I went to Singapore for 3 or 4 years, and I was working with the Singapore Exchange, assisting in their transition from open outcry to automation. So I was working with them, and I was obviously trading electronically as well. I didn't have a license to go down onto the exchange floor, so I wasn't able to trade down there. I went down there on day visits, of course, to see all the guys and warn them about the impending change. But anyway, so when I came back to the UK in about 2004, 2005, I was trading from home, and it was a Saturday afternoon, and it sticks in my mind. It's basically had an impact on me really. I was going off to watch my local football team, Crystal Palace for my sins, play on a Saturday afternoon, and I think I was meeting some mates, and I was going to have a few beers afterwards or something. So I called up a taxi. Sure enough, my minicab turned up. Got in the back of the minicab, and the driver sat in front, turned around and said, "All right, Andy." He actually said he actually said my nickname, which so I'm not putting out on this site at the moment. But he actually called me by name. I said, "Is that?" And I'll make up his name. I said, "Is that Lance?" He goes, "Yeah, all right, mate. How you going?" I said, "Well, what are you doing?" Now, this guy was a big trader on the floor. This guy was worth, a lot of money. He was a multi-millionaire trader, and now he's picking me up to take me to the football game, so I could have a couple of drinks, maybe. I said, Lance, what's happened? He goes, mate, I lost it. Oh, well, I lost everything. He said he lost $2 million, £2 million. It's about the same these days, isn't it? Maybe $2.4 million on the screens when the floor closed. So in the last 3 or 4 years, since he's been trading on the floor, on the screens, he'd lost, all this money just trading the screens. And now he's driving me a minicab. He said he's lost his wife. His wife left him. He's lost his house. He's now living with a bed. He was living in a bed sit with one of his mates that put him up or something like that. And he was there just, driving me as a minicab driver. And I thought to myself at that time, and throughout the day of the game and weeks and months, and even to this day, I think about that. I thought I will never let that happen to me. I will never let myself lose complete control of where I am and respect for what I'm doing. And that really has stuck with me. And I thought that is never going to happen to me. So that's I just want to start off with a bit of another story, because I know a few of you have liked my stories in the past, so I appreciate that. Okay, so let's now go to this quick PowerPoint I put up this morning of why some traders fail in the market. Okay, now I've got to make sure that I don't do what I did yesterday, and that's cover my my beautiful face covering the slides. So we'll see how that works. Now in fact, I asked my daughter last night to draw me a quick sketch of a frustrated trader. So she put this one together for me. Not quite sure why she's done this chap with no hair. I have no idea what's going on there, but she put this through to me and she signed it there nicely as well. So I thought this is a good way to display some of her cool work. Okay, so I think now this has got to be the main reason, above all the reasons, why most retail traders fail in the forex markets or in general retail trading from home, whether it's forex or any other whatever. And that's the unrealistic expectations. They come into the market expecting to turn a $500 or $1,000 account into a lucrative business, so they can give up work and they never have to, succumb to a boss again. And this is basically one of the main reasons. And a lot of the people that are out there, certainly that I've spoken to over the, I meet people all the time in different environments, and they say they've lost their job as well, and they can't get another job. They don't want to go back to the rat race, so they think they're going to turn, to trading. They've lost their work, desperation. What else can we do? They get marketed all the time by forex brokers to open up trading accounts. And as we know, these brokerage houses can offer massive leverage out there. Some of them would be offering 200 to 1 up to 500 to 1. I know it's less in the States these days. I think, don't quote me, but I think it's around 50 to 1 maximum leverage. Of course, Jason, my colleague, and he's been doing some great streams this week. He will give you more insight into that. But I think it's a lot less. I think it's about 50 to 1 out there in the States. So why would a guy not, try and change his life with a $1,000 redundancy package and try and trade the markets? He puts $1,000 in, he gets a 100 to 1 leverage. He's able to trade one whole lot in the markets. And what's going to happen? He might very well make a few winning trades, and all of a sudden, he's got his confidence up, and he starts increasing his size, and now he tells everyone down, he's a trader. He's now a futures trader and a FX trader, and it's glamorous and it's great to be telling people this. But I think you all know where this story's going, so I'm not going to patronise you with it. But yeah, eventually he blows up the account, and he loses the lot. It's a typical way where most people that start this business will lose money. They over leverage in the market. They're not educated, and they blow their accounts. Now, some people will go away and learn from that. Other people will say, well, there's more where that came from. I'll put another grand in. I've learnt my lesson now. I'm now going to be more cautious. He has a couple of losing trades, a couple of winning trades. He hits a winning streak. Whoa, he's off again. We found another excellent trader amongst us. And what happens? You get the idea. So that's basically, I think, the main reason why people, sort of start off with these wrong expectations. In fact, I had one only yesterday talked to me about it. He wants to start with. He actually said he wanted to start with $10,000, which is a reasonable amount of money to start with, but he wants to make $300 or $400 a day on the back of it. Well, I had to put him straight on that one. Right, now, don't get me wrong, starting with a small amount of money, nothing wrong with that at all. Absolutely fine starting with a small amount of money. In fact, if you can prove, I don't know what small is, that's everyone's different, that's a very subjective amount, but I mean, if you can prove consistently that you can follow a set plan, a set of rules, and you consistently return, a positive ROI, risk return on investment over the course of 6 months, a year, 2 years, even starting with a small amount, you can prove that to someone, your friends, family, that you can, follow rules and discipline, then believe me, in this business, there will be people willing to give you, backing and investment. So don't think because you've only got $1,000 to trade or $5,000 or something like that, that it's not business for you. It certainly can be, but it's the same rules apply whether you're starting with, $1,000 of, or $50,000. You've got to maintain the discipline. There is a tendency, however, I think it's harder to break the rules when. I say that the wrong way around. It's easier to break the rules when you start with a small amount of money because, if you're starting with a $5,000 account and you make 5% in a month, well, that's a great. I mean, believe me, that is a massive return on investment. 5% in a month. If you compound 5% a month up, it's 79 point something percent. It's 80% on year. There's not many people out there getting 80% in their investment portfolios. So 5% on a $5,000 account is $250. Well, you can't live on $250. So there's a tendency, because you have a smaller account size, to break those rules, and so that the pressure is against you more, I think, or is more pressure there if you have a smaller account because you soon get bored, and $250 doesn't rock your interest too much. So that is something that I think you should be wary of. Okay, let's go back to the PowerPoint. Okay, the Holy Grail searchers. Again, I think by looking at this room for the last few weeks, I don't want to patronise you, but I think we're all adults in here. Certainly if you're not an adult, you shouldn't be here, you should be at school. So, I mean, we all know that, the Holy Grail doesn't exist. So I'm not going to go on too much about that. Believe me, if there was such a thing, I would have found it by now, and I wouldn't be, freezing myself here in this house here with no boiler. They're coming later, but I'll be on some Caribbean beach having sold this to Warren Buffett or George Soros or something. So we all know that this doesn't exist. So Holy Grail seekers, there are lots of people out there that they think it does exist, and they do believe that this can come in a box, this trading business. Well, quite honestly, we know it doesn't. So what do the Holy Grails seekers do? They are prone to be buying countless courses and software. I think I mentioned to you early on in the week about this lady I met at the show a couple of 2 weekends ago that spent $50,000 on courses and software. She'd never opened a live trading account. There's people out there doing this. But what you often find with people that do open trading accounts is that they buy a bit of software, they go to a trading course, and that's great. I mean, everyone should be educated. There's nothing wrong with having a trading course. There's nothing wrong with being, we're buying a trading course. I mean, a lot of it's obviously free out there. We certainly won't be selling any trading courses, and it's all free. A lot of the stuff is free. There's nothing wrong with doing a trading course. There's nothing wrong with buying a bit of software that gives you some discipline in your trading. There's nothing wrong with that at all. But the problem is, people use this. They see a drawdown period and they think, they throw it out and they go and do something else. So, and then they go on a different course, and then they see someone talking about, how they can, follow this guy, and he's going to sell you a course for whatever it is, and that's where they move. They chuck all the other learning they've done, and now they go with this new guy. Actually, I was at the forex show in London at the Olympia last February. And there's a guy out there, and he had employed obviously these young guys and girls, pretty girls and good-looking guys, all morning, all afternoon, handing out leaflets, talking about his speech at 5 p.m. I think it was. So it was billed to be the highlight of the day at the expo, at the exhibition. Sure enough, I hung around just to find out what this guy is on about. Now I'm sure a lot of you know this person. I'm not going to mention his name because I know this is going out on YouTube to hundreds and hundreds of people. So I don't want to put his name out there, but maybe someone might mention his name in the chat room, and you can sort of tend to agree with it or not. But he's quite known in the market as basically a marketeer for this type of stuff. Sure enough, he does his 30-minute speech or something like that. But it's tailored towards selling a trading course for $999 for a 2-week trading course and lifetime mentorship after that for $999. And I looked at the room. There's about 300 or 400 people in this auditorium sitting there listening to him. And I'm thinking, God, are these people getting sucked in by this? Well, of course, the $999 was not the final price, because if you sign up now, today, because all his young people were there with their clipboards, if you sign up today, he can accept 15 people for $250. 15 people, $250, and it's going to change your life. Gosh, all the hands went up. And they're all up there, and they're trying to get, like being back at school, trying to get your hands as high as you can, to get noticed by one of the scouts there that's going to take your name down for your $250. Well, of course, he took his 15, and then the girls went around afterwards getting all the names of the people that weren't selected of the thing, and then making sure they signed up anyway. So he'd sold a trading course that's going to change your life for $250 because all the hype and attention he'd put behind it. It's not going to happen, guys. You're not going to change your life by buying a $250 trading course from a guy like him on. It wasn't that guy you mentioned, Fresco. Yes, I think Yo-Yo might have known this guy. We'll leave it there, Yo-Yo. Let's not deflate. I'll put this guy down in a general place. But yeah, you got the idea. You know who it is. So that's not going to happen, guys. Now, another thing I've noticed, certainly on the web, when I looked at preparing myself for this new sort of venture that we're doing, I haven't really been involved in looking at the market over the years, but I've just basically looked at it over the last month or so, and I see all these EAs that are on sale. These EAs that are $99, and they're going to be great. They've got X track record and so forth. Guys, there's nothing wrong with EAs. Nothing wrong with EAs at all. A lot of people use EAs as long as you respect them, know what they're all about. Don't rely on them. You're not going to sit on a beach and let an EA run on your trading platform back in your office and expect to pay for your life. EAs are great, but you're not going to go out there and buy one for $99 that's promising the world with a 30-day money-back guarantee that comes in a nice box and nice visualizations and all the wham bam and all that stuff. It's not going to happen, guys. You're not going to do it. People do it. Ignore them. Please just ignore all that stuff. There's a lot of decent stuff out there. You don't need to be buying EAs for $99. A lot of people in this room here I see talking about EAs. A lot of people in this room talking about EAs and so forth. Wonderful. You've tested them, you've worked them out. Those are the type of places that you can find something. Test it, look at the track record, test it yourself. Hopefully on a live environment rather than demo markets, because demo markets behave differently. And of course, and if you've got confidence, put some real money into it. Again, don't bet the farm. I'm just going to have a quick look here. Okay, I'll come to these questions afterwards. Sorry, I thought that was something a bit more pertinent, but I'll come to these questions in a moment. Okay, hobby traders, hobby trading. Okay, now there are many out there that are trading for fun. They don't treat it as a business. They do it for a bit of excitement. And again, there's nothing wrong with that. Nothing wrong with that at all. But appreciate it for what it is. I, for one, I've got an interest out in Asia. I go out there to Asia. I love going to the casinos in Asia. I love going out there. It's a great night out. I might have a few bucks on the blackjack table. I don't really get roulette. I think it's too, But I like playing the casino. There's nothing I love than going out with my mates on a Friday night, and playing poker. We go there with a few bucks each, and we have a few beers and we play poker. I don't expect to be buying, a new car out of the back of it. I don't mind taking money off my mates. I don't mind losing money to my mates. It's fun. If we're trading forex for fun, great, it's fun. But don't expect to come out on top, and don't expect to turn, don't get frustrated when you lose if you're trading it for fun. Personally, if you have got, if you're looking for a hobby, I think there are much more interesting things out there than trading forex, or any markets for that matter. But if that's if that's what tickles your fancy, then go for it. I've just think there's just more to do out there, and play with play poker with your mates much more. So let's now assume that you haven't fallen into any of these categories. And I know by the sort of general type of people we have in the room here that I think most of you are not from that category. You might have been there in the past, but it looks as though now that you're sort of, I think you've seen the light to a certain extent and not that. If it is you, then fine. Maybe you might take something away from today's today's little chat and learn from it. But if you're not one of those that fall into this trap, these traps, and now you are looking to progress, we'll look at the reasons why I think you could be losing money. With all that aside, one moment a sec. Okay, so the biggest reason is not having a trading plan. Now, I don't know who it is. Certainly, you've heard it before, and I don't know who the philosopher was, but someone said, if you don't plan where you're going, the chances are you'll end up in a place you don't want to be. Now, that is very, very true for trading. I'm not going to bang on too much about trading plans now. I think we all know about trading plans. Next Thursday, I believe. Next Thursday, I'm going to be talking more about trading plans and stuff like that. But basically, that's just like an overview. You've got to have a trading plan. If you don't start off with a trading plan, I say you've got to have it written down. But if you don't have it written down, you've got to have a plan. You've got to know where you want to achieve out of this to give yourself half a fighting chance. Okay, so let's just run through the other real reasons I think a lot of retail traders give up money. Not trading with a risk reward of at least 1-to-1. This is subjective again. I hear a lot of other successful people trading with that don't adhere to this philosophy or don't adhere to this rule, and that's fine. That's the way they trade. Personally, for me, if I'm training people or mentoring people, I like to think you have a risk reward of at least 1-to-1. I totally believe I didn't get many qualifications at school, but one of them was statistics in O level. And I just generally believe in probability. If you're constantly taking less profit than you are on your losses, over the course of 1, 2, 5 years, I believe that you'll end up at best flat, but more likely to be losing. I think you have to place a trade in this market with at least 1-to-1 risk-reward ratio. And I think you should make sure that if you don't get the risk-reward ratio by looking at your levels on your charts, we'll all be going through this in the premium room in the weeks and months ahead of how I do it. Obviously, everyone has their own strategies and so forth, but we'll be going through that in the premium room and so forth. But if you don't have at least 1-to-1 risk-reward ratio, I would rather leave the trade alone and look for something that has that. But again, if your plan says that you can trade with less than that, then fine, as long as it's been tested, of course, and you've proved it over the, in a live account over small amounts of money, that's fine. But I just generally believe this is something that I like to drill into people that I train and mentor. Okay, well, we all know about stops. Again, it's a really subjective point. Again, I know people that don't use stops. I don't quite know how they sleep at night, but I mean, maybe obviously they haven't got a big size on the trade or something. But I'm a firm believer in stops, and that's just the way I trade. If you want to stay in the game for tomorrow and the next day and the next month, the next year, and you want to make this into a business that's going to pay its way, and hopefully, change your life. I think you should protect your account. And stops are there to protect your account. So someone might say, well, I'm trading such a small amount, I'm not going to blow an account with such a small amount. Well, Yeah, fair enough. I hear that. But if you do have that trade that doesn't have a stop and you end up losing, if you end up losing big drawdowns on your account, it's going to take a long time for you to get back into that, to get that loss back. And I think, if you had the stops in place and you got the market wrong, forget about it, move on to the next one. There's loads going on out there. There's always something going on in the markets, to find opportunities in. So just get on with it. If you've got it wrong, get on with it. Moving stops, well, yes, you should only move stops in your favour. You never move stops because you've changed your mind and you now give it more room to breathe. You only move stops when you're in the money and you're protecting profits. You don't move stops now because you don't like you've changed your mind. You don't want to realise that loss that you put out in your strategy plan before you started. No, you just don't do it. I mean, if you do it, then you need some serious rethinking about what you're doing. As far as I'm concerned. So I think you should have stops, and I think you should not be moving them. And the other thing I wanted to mention was adding to losers outside the maximum risk. This is there's a style out there, the martingale approach, where people, they chase their losses and they basically, I think you all know what martingale is. You keep chasing your losses. Now, I personally don't think you should be doing that unless you've got a predetermined maximum drawdown. I know there was a contributor here on the site that had a maximum drawdown, I think, of about 7% or something. So he added to losses up to 7%. Well, I think he ended up having an accident at one point, and he's not on the site anymore. I don't know too much about what happened. But I believe, I don't trade that way. There are many successful people that do trade that way. And I think not a lot of, but some of our people in the in the managed accounts trade that way. Fine, they're obviously very, very experienced in what they do in that approach. I personally don't do that outside of a maximum. If I'm maximum, I'm going to risk on a trade is 0.5% or 1%. If I add to a loss, my still maximum loss is still going to be 1%. I'm never going to exceed that. So, quite honestly, and you'll get to know me over the months ahead. I don't. It's not really an approach I use too much, but I know people do it. I think, it's a sure way of blowing up an account at some point, and it might be 2 years down the line, and it might be 5 years down the line. But at some point, that's going to happen. At some point, you're going to get the World Trade Center happening again. God forbid that happens again. But at some point, you're going to find something moves for no reason out of our control. Sometimes you're going to get, the Swiss franc, breaking away from its peg. Sometimes you're going to get someone like Warren Buffett coming in trying to take on the Bank of England and selling the crap out of sterling. I mean, it's going to happen at some point. So as far as I'm concerned, I don't add to losers. I'm going on again, so I'll wrap up very soon. Not learning from your mistakes. This trading business, we're all humans. We all make mistakes, and I make mistakes as much as the next people. But those mistakes cost you money. They cost you money when you're trading. But it's the cost of the business. Why should you just waste that money with that mistake? You should learn from that mistake. So mistakes are all part and parcel of what we do and how we behave. You should learn from that mistake. So get value out of that mistake. Get value out of that money you've just given back to the market by learning from it. I think one of the best ways to do that is obviously keeping a written journal. I'm going to talk about that again next week, again on Thursday next week. So don't just make a mistake and think, oh well, that was a mistake. I'll because the chances are you'll come back and you'll do that mistake time and time again unless you sit down and analyse that mistake. Write it down. Why have you made that mistake? You might make that mistake again in 3 weeks' time and say, shit, I made that mistake 3 weeks ago and I've done it again today. Learn from that mistake. If you're learning, you're always progressing. We are all evolving as traders, whether you're new in this room, whether you've just started trading, whether you don't know what a candlestick is, or whether you've been trading for 30 years, 30 years, we are all evolving as traders. So you should always be mindful of the fact that you're going to make mistakes, learn from them. that basically wraps up the first week of these live sessions. I hope you found them educational. From what I'm hearing, I'm getting a lot of feedback about the premium room. We've got a lot of interest in it, and a lot of people have signed up already. So for those, thank you very much. I'm really looking forward to working with you and with Jason on the 28th of November. We start in a week and a bit's time, so I'm looking forward to working with you on that. So thanks for putting your name down and getting set up for that. Next week we've got a jam-packed week of scheduling in terms of education coming in. The information's on the website with the schedules and so forth. Next week I'm going to be coming in with a bit more what I call ad hoc stuff. Ad hoc basically being, I'm going to come in, and I know, Tony does a great market analysis at 9 at GMT. I'm going to be coming in throughout the day doing very shorter versions of that. Basically, I haven't got time to be doing 1 hour sessions every hour, but we're going to be coming in doing some ad hoc sessions, just going through some markets, keeping screens on our keeping our screens on the window there, so we can just discuss things, and much more of a discussion, so you can start joining in a little bit with what we're talking about, rather than these these structured sessions, which are going to still happen, but we're going to do a bit more of that next week as well. So do make sure you stay tuned. We just had Canadian. I haven't seen it. Canadian numbers came out. I don't know if you've got Canadian positions, or whether that's important. But if you Canadian strong this morning. Anyway, I'll look at that later. But so next week I look forward to seeing you. I'll pop in later and see what I see going on in the markets. We've got some big moves to say in the dollar this week. Bit of consolidation now as well. I don't think personally we've got much out this afternoon that's going to make any moves significant. So keep it safe, and don't lose your week's money on a Friday afternoon. Otherwise you'll be up till market closes 10 p.m. Eastern time, or whatever, 5 p.m. Eastern time, chasing it back. You don't want to be doing that. I'll speak to you soon. Good luck.